Hi everyone, today is February 8th, and in this video I'll break down the three biggest crypto stories that shook the market today. We'll talk about the Bithumb $40 billion error, the brutal Bitcoin crash, and finally China's new crackdown on stablecoins. First, South Korean exchange Bithumb accidentally sent out around 620,000 Bitcoins worth more than $40 billion. For a short time, hundreds of users saw balances that looked like they had just won the lottery. Heavy selling on the platform briefly crashed prices there before the error was contained. Bithumb says it recovered essentially all of the funds. They confirmed that this was an internal mistake, not a hack, and promised compensation for affected users. They announced plans to use AI tools to detect abnormal transactions and strengthen verification systems in the future. Regulators in Korea reacted quickly and opened a review, signaling tighter oversight after this incident. In the community, people are joking that one click can print tens of billions, while others see it as a survive stress test. My view is this whole situation is a trust test. Once trust is damaged, it never comes back to 100%. For my own strategy, I treat this as a reminder to spread funds across multiple exchanges and use own wallets. Next, let's talk about Bitcoin's brutal drop, sliding below the key $70,000 level recently. This move wiped around $2 trillion off the total crypto market, with billions in leveraged positions liquidated. Some analysts are now openly talking about death spirals and crypto winter 2026, saying we are entering a long bear phase. On the other side, this crash was triggered by macro pressure, hawkish central bank messaging, and ETF outflows. Some on-chain analyses argue that long-term holders are still strong and smart money is quietly accumulating. Fear indexes have dropped to very low levels, which historically often appears near cycle correction lows, not tops. I don't see this as the end of Bitcoin, but more like a fitness test for the market and leverage users. The people who can take advantage of crashes are the ones who kept enough cash and did not over-risk. Finally, China has just taken another major step by banning unauthorized yuan-pegged stablecoins. China wants to protect its digital yuan and prevent private projects from competing with its monetary policy. This adds another layer of regulatory risk to the global tokenization and stablecoin narrative. If China steps back, that space could be filled by projects based in the US, Europe, or the Middle East. I see this more as a signal to watch which regions are going to capture the volume that China is pushing away. To wrap it up, we're seeing three big themes: exchange risk, market risk, and regulatory risk. All are stress tests. In this environment, my priority is simple: reduce structural risks and match positions to your long-term conviction. Please hit the like button and subscribe for next daily briefings. Thanks for watching, and see you in the next video.